Moving on to our first panel discussion of the day, ladies and gentlemen. Before we get you started, we have some walk-ins. We request you to kindly be seated. Please take your seat. There are a few empty seats in the front. You can occupy the space. Thank you. Moving on, ladies and gentlemen, the topic for the panel discussion: using big data and AI to personalize and enhance lending decisions. And we are delighted to welcome, to moderate the session, Mr. Nikhil Kurhe, co-founder and CEO of Finarkein, Mr. Akshay Mehrotra, Group CEO of Fibe, Mr. Prashant Pitti, co-founder Optimo Capital, and Mr. Hemant Gala, CEO, PhonePe Lending Services. Let's welcome them with a round of applause, and we request Mr. Nikhil to commence the session.
Early mornings are tough.
Hi. Yeah. Hello, is this audible? Yes? Okay, perfect. So I am genuinely surprised and happy to see a full room. So kudos to whoever braved the early morning traffic, gate number 22 and the entire nightmare. And trust me, it's better than last year. I think last year was a different level. I think we are the first panel or one of the earliest panels that will be slicing and dicing this topic around data and AI and lending and financial services over the next 3 days. I'm sure there are multiple panels lined up, so I hope we do it justice. I have some amazing co-panelists with me. I think they need little to no introductions individually as well as their brands. So with that, let me get right into it. I think I'm going to start with you first, Akshay. So, 1 second. Awesome. So I think, Fibe has evolved, even from rebranding. I think that made sense due to the breadth of the kind of products you guys were doing, right? Beyond, let's say, just, payroll and financing around that. And eventually, as you look at new categories like, let's say, healthcare financing, which I think you guys picked up in COVID and so on, definitely AI and alternative signals are used to underwrite customers, especially in such segments where you're not only looking at an individual, but maybe their parents' income and history. Let's start with how has application and adoption of AI evolved? A follow-up question for that is, with, let's say, the recent development in the last couple of years, internally also, have you seen like a acceleration with respect to the development speed and sort of, discovery cycle around these things?
Thank you, Nikhil. Am I audible to everyone? Yeah. I think Fibe, or what's called early salary earlier, started as the country's first digital lender. Right. When we came to the table and said we want to give an instant loan on a mobile app, people said impossible. Right. You can't give money so fast. It's going to be tougher. Right. And we had to create a concept of building scorecards on an ML model. Right. It was very difficult maybe 10 years back to incubate a 50-member machine learning team and build your first scorecard. Right. Today, let's say we are on our version 10 of our scorecard, and this has been a great evolution in fintech. The first is the ability to build scorecards and turn around a risk algorithm, let's say back to it, 25,000 trended variables, would in a traditional land take 3 to 4 years to build and deploy. Today, the deployment window of build to deploy is under 45 days, which means the team can construct every few months a new decisioning science engine, can decide where the market is predicting better, and you can redo your ability to run in a better manner. The second part of this entire science has been, if you're onboarding a segment of consumers, how do you really use a large segment of fragmented data, build variables on top of it? Now today, the version 10 scorecards have 25,000 variables. The scorecard itself runs multiple times on the same customer cohort, which means the same customer will be underwritten by a version 1 scorecard, version 2 scorecard, a challenger overlay, and then build alternate understanding on the consumer. This allows you to run decisioning faster and at the same time position yourself in one of the Asia's fastest lending products. Today, an average customer turnaround time is 3 milliseconds. right? Today, more than 94% of the consumers get a runtime loan, which is there's no wait time. We are able to construct, let's say, decisioning on him, and then build overlays so that you can do underwriting for specific use cases. Now, one of the use cases that we over time evolved as we went from the journey of early salary to Fibe, we said we'll perfect the art of giving personal loans. Typically, we give, let's say, a 1,20,000 rupee loan, and we do more than 2 lakh loans a month. Right? So engines have to be well run. We said that we also have to start showcasing impact, which means we'll start doing loans for specific use cases, and we chose healthcare and skilling as two areas that we spend time in. Today, after a few years of working on this, we are officially the largest fintech in education loans. We still don't do education, we only do skilling. Right? We are still evolving to build that category. And we unearthed a category known as healthcare, or we call it surgery finance. Right? Interestingly, today, let's say, more than 500,000 people from health insurance to their health surgeries are financed by us. Here, the surgeon pauses the surgery for a couple of minutes so he can get the excess money that he needed for the treatment. And we're able to build the engine of understanding what's the treatment happening, what's the ability to pay off the family and not just him. Because sometimes you're really catering to threatening diseases, you're managing large surgeries, IOTA changes, etc. And here, how do you build intelligence beyond the underwriting of a bureau or a bank statement? So that intelligence can be run on a scorecard. And let's say, and look at the output that you're chasing. You're chasing 74 to 78 genies. You're chasing 99.2 to 99.4% accuracy, which means their scorecards have to predict risk. They have to hold true for 36 months of giving decisioning. You're going to take a risk of, let's say, 2 to 10 lakh rupees in an unsecured manner and predict risk on a customer, not just on his paying capacity, but outcome of what you're treating and giving money for. So that is the new evolution that we are seeing, and that's allowing us as a company to remain far ahead than the traditional lending capabilities. It's allowing us to churn a large amount of data on the consumer and build intelligence beyond the normal way of doing lending, right? Giving money is easy. Managing risk at a larger level, evolving every year so that you are more agile, and then building propensity and differentiated scorecards at a regular basis is important.
No, I think I've seen that evolution as well as the rebranding journey happened, and the once we started working, we understood the breadth of the kind of products and offerings you guys are able to bring to the table. So, and I can only imagine the kind of effort and time along with the work that the data science team has done to sort of make that happen. So incredible. So Prashant, I think I'll come to you next. You have taken the path often not taken doing priority sector MSME lending, that too loan against property or a LAP kind of product, right? So that brings its own set of challenges around legal, valuation, paperwork, feet on the street. So how do you add an element of AI and machine learning and data science in this category? What sort of challenges have you faced, and how far along are you on that journey? I think while your other brand is very famous and well known, but I think Optimo is still young relatively, right? So how are you looking at what have you done so far, and what do you see as the next sort of couple of quarters looking like for you guys on that journey?
Sure. Thanks, Nikhil. Everyone, I'm also a co-founder of EaseMyTrip. That's the other brand which he was mentioning about. I started Optimo Capital about 2 years ago, and there was one particular metric which made me do it. And in the last 2 years, we have come so far where I've actually even stepped down as a managing director of EaseMyTrip to do this full time. So that's a call which I've taken only about 10, 15 days ago. The metric which was presented to me was basically the mortgage to GDP ratio. Our country mortgage to GDP ratio is somewhere around 10%. For most of the Western world, it is about 50%, which clearly means that the biggest asset our country has, which is basically in the format of land and property, is not utilized properly. When we use that asset to generate more business is when the GDP growth can happen even more faster. And with that thought process, we started Optimo Capital 2 years ago. we basically only do MSME lending, collateral lending, which is on the basis of their property. And so far, we are a team of 500 people and present in 52 cities, growing decently well. The differentiation over here, which we have brought in, there's a video as well, which I shared with you. Maybe we can play that later. But the differentiation which we have brought in over here is, just like, Akshay was mentioning that 10 years ago, thinking about giving money real time seemed impossible. And kudos to you guys to be able to, the front runners to do that. We would want us to be known that for loan against property, where, right now, any banks or NBFCs usually take anywhere between 15 days to 2-3 months to roll out money, where there's so much of work which needs to be done, which is the legal check of a property, the valuation, then everything which unsecured business loan does. The bankings, the cash flows, the CIBIL, and all those things. So put together, there is a lot of teams which work together cohesively and hence present a sanction letter to the customer. At Optimo Capital, we are flipping this completely. Using the publicly available mortgage records, we are able to identify the land rate in a matter of few seconds. And we are basically connected, our APIs are connected with government records where on the basis of the OTP, we are able to check who the current owners are and also check the lineage for the last 13 years if the chain is broken between the ownerships. If there is a broken chain, then we do it manually. Otherwise, 70% of our cases just go through automatically because the chains are not broken. The ownership chains are not broken. And then using account aggregator, using CIBIL pull, we are ready with in principle sanction letter in a matter of 1 hour, which basically takes months for some banks. So most of the customers which come to us actually are bringing property papers from somewhere else so that they can get disbursement much faster. And there are a bunch of records which are publicly available in the format of digital land records. We are using that extensively, and most of these digital land records are very well available in southern India states, Karnataka, Tamil Nadu, Andhra Pradesh, and Telangana, which is why I actually have set up the head office of Optimo Capital in Bangalore, while the entire EaseMyTrip team sets out of Delhi. So using a lot of, there are 206 type of businesses which we focus on, and using various ML models, we have created 206 different kinds of PD sheets, which the customer goes through, and they answer to their best capability about their business, and then it runs to the ruling engine, and final decision comes from the ruling engine of how much amount, how much tenure, and how much interest rate is to be paid. And if the video could be played, it would be great. Do we have that facility?
Yeah, we'll be playing it towards the end.
We'll be playing it towards the end. So what we have done is we have created an AI agentic model, which basically, instead of visiting the customer in person, the AI agent basically asks customers to show the house. And the AI agent only asks customers with respect to take me there, take me here, show me the bathroom, show me the kitchen, show me the periphery, show me the boundary. And what the agent is trying to do, the heart of the system is the agent is trying to understand the lifestyle of the customer, understand how many people actually are living in the house by seeing the number of beds, by seeing the number of chairs, understanding what kind of construction it is. Is it tin shed? Is it concrete? And finally come to a cost of construction, which helps us to come to a very close understanding of who this customer is and how much amount we can lend to them.
Got it. And how do you decide on the LTV? Like, just a quick follow-up on that.
So LTVs again vary depending on whether it's a self-occupied property or whether it's a rented property or whether it's a commercial property. The scorecards have about 40, 50 or different variables, and the LTVs are usually varying anywhere between 30% to 65%.
Makes sense. No, actually, that's pretty incredible. So thank you for sharing that. Hemant, I'll come to you next. I feel like I have the ultimate trinity here. I have unsecured, I have secured, and I have an LSP. So it's like the perfect combination. So I think for folks who don't know, PhonePe has a pretty large lending arm, but which primarily operates as an LSP. and not as an NBFC in itself. And of course, PhonePe is known for its payments infrastructure, and I think I don't know how much Hemant will be allowed to share, seeing as how I think PhonePe will be filing its papers, if not already filed pretty soon. But let me sort of get to, I think, how payments and data around payments combined with, working with lenders as an LSP, how all of that sort of comes together. So let's talk about one, you have to deal with a bunch of lenders. How do you make sure that their policy teams are able to get the right signals and derived information uh, from let's say PhonePe, and there will be some native to PhonePe data, let's say vintage of a merchant, or their daily earnings. All of these things also are very relevant signals to lenders, and personally I've seen that lenders are more and more open to these alternative data signals and insights from LSPs and other private networks. But I'm pretty sure that PhonePe and other companies really played a significant role in setting that trend and evangelizing consumption of these alternative signals. So could you just highlight a little bit of that journey, how that has been for you guys?
Thanks, thanks, Nikhil. So basically, maybe I'll take a slightly step back and explain what business we are when he says merchant. So we have a large network of consumers on one side and merchants on other side. And merchant network, has been something that we've built with a lot of hard work last 10 years. And if you see, these are all the QR codes that we have deployed right from tier 1 to tier 6, 7, small towns, villages, hinterlands, and these are not, when in the definition of MSME, there's medium small, but there's another element which is there, which is the micro merchants. And we've primarily kind of empowered the micro merchants, which is the real small corner store, the kirana store, or the fruit vendor, or the guys who've been largely on the fringe of financial services, not always covered, who didn't have enough documentation, who didn't have enough education and understanding of what it means, to kind of avail of a loan, or kind of something where they can run their business. So they live hand to mouth. They need working capital every day to kind of run their businesses. So when we went on ground, we realized that this segment is something which is incredible. They are incredibly honest. They are very hardworking. They are the heart and soul. In fact, in terms of numbers, what MSME Ministries published, almost 95% of MSMEs are micro merchants by count. And in terms of value of loans and all, it's largely medium and small enterprises. So what we realize is that we have a relationship, we have a reach to these merchants. The other challenge when we went on ground and when we looked at data and when we were looking at our data, the quantum of business that they were kind of processing was not as significant, but the velocity of it, every day, the kind of business that they were throwing, the throughput that was going was significant. And that's where we worked with our lenders and brought this concept of, instead of an EMI and EDI product, which is equated daily installment, and created really, what we call in the real sense of flow-based lending, which means that, they do business every day. There is a daily EDI deduction that happens for the merchants, and that is where the entire data around how their business is, what their MCC is, where they are located, how are they doing, what are the kind of customers, all of this is consumed by the lenders in trying to understand how do they look at a loan being given. Because if you go and look at what's also happened in the last 10 years is there's a lot of digitization. So what used to prevalently happen in cash has actually moved to digital. So the digital transactions give them an estimate of the volume of the business that the merchant overall is doing, and basis that they take a call of the kind of loan that is to be given. We have a vast network of almost of thousands of feet on street who actually go on ground. So this is not a where they play in the digital world, we play in digital plus physical world, because our folks go on ground and meet merchants. So that is where the entire data comes in play, where which merchant to go in, where is the propensity of conversion highest, who is really looking for loan, and what time of the business are they, what cycle are they going through, and go in there, educate them, get them through this entire process. While we say the entire digital part of it, they struggle setting up mandates, they struggle setting up doing their KYC, and also handholding them through this process, all aided with a good amount of data, the entire training of thousands of feet on street, is all driven through AI. The interventions that we give to them and their eventual reach out to the merchant is driven through that. So that is where we've created this beautiful concept and a product of equated daily installment, which is truly flow-based lending, which is deducted either through mandates or the business that they kind of generate, and is repaid every day. This in essence has been used by lenders. One, our understanding of merchants and their business, our ability to reach out and prioritizing which merchants, geographies, locations, pin codes, and 50 kilometers from Nasik, a small town, not just in Mumbai, but 30 kilometers from Nagpur, or 50 kilometers from Jalandhar. If you have to really go into hinterlands, and there are so many strong pockets of real good merchants that you can actually go on ground, and you need to be in a digital plus physical version. So that is what we've kind of done with the merchant lending product.
No, and I think that's incredible. A quick follow-up to that. How important are field visits, let's say not just for the feet on the street sort of teams, but also your tech teams, your data science teams? And have there been sort of any unique or novel features that have come up as a result of some of these visits? Is that something you can share with the audience?
Yeah, in fact, so, we look at things like, the kind of amount of time that is spent at the store. Does the agent need more education? The merchant needs, in the funnel, the amount of time that is spent, say, in KYC. Is there friction on KYC, and do we need to circle back with our lenders and improve that? In the mandate side, so, if there is a, mandate, and if there's time taken on mandate, or if there's a particular bank which is kind of the merchant struggling with mandate, and things around everything to do with the funnel, is really been helpful. So when they go on ground, the understanding, the ground reality, which matches up, which throws up data on what is happening, be it at the agent side or be it at the merchant side with regards to the funnel, which then we kind of quickly circle back with our lenders to bring in intervention. We have created very strong AI-based propensity models, which means, I am able to prioritize basis the merchant's interaction, visit, business, MCC, customers, which ones to go first and which ones to go later. So the entire targeting is based on a very strong AI-led propensity model, which helps eventually bringing down the cost of, conversion and benefits the overall program.
Got it. No, that's pretty interesting to know. So Akshay, I think I'll come back to you. So I think let's now go back to the office from, let's say, the field. I think when it comes to once we get data in, you have to obviously deal with a lot of documents, images, and naturally there is still an element of fraud that's at play here, right? So has like fraud really evolved for you guys over the last few years? And I'm sure it's a cat and mouse game. People figure out sort of gaps, and it takes a while for the teams to catch up. So how do you keep playing that game? And has that evolution been accelerated with AI, in the sense, are bad actors also using Gen AI and other tools? And are you guys playing catch up, or it's the other way around, where you guys are proactively setting the new rules for this new age?
See, lenders are technically the most conservative people in the world, right? You need to have a department which is known as FRM, which behave like the CBI and office, always looking at who are the fraudsters and what they're going to do wrong. I'm going to take you through a couple of insights of what we identified over time. There are two tools that we built out. In case I wanted a video to be played, but maybe you can play it after that. The first example is recognizing a customer visually beyond the human being's capability. See, we are runtime lenders, but we've never seen an actual consumer. Right? After giving almost 7.5 million loans, we have never actually physically met a person. But how do you make a repository? So we've been capturing customers, let's say VKYC, selfies, and authentication. And we said, can we actually build analysis of that consumer? The first was, of course, the simple reason you'll build deepfake capabilities. You'll be surprised at the number of, let's say, native systems available to build a full end-to-end video interaction on VKYC, which can be completely built on an AI tool. You could actually fake the entire VKYC also. So the first is, how do you build a tool which does that, so it can protect deepfake and protect you from that. The second is to build underwriting triggers so you can control risk in a better manner. So this was the easy part, capturing deepfakes and, let's say, fraud by consumer in some manner. But can you build it as an underwriting overlay, Now, this is interesting. These are actual data. We've been able to reduce risk by 1.5%. Almost 10 crores a month is getting saved here, which means that we can predict, looking at you, examples of aging, income estimation, hair loss, wrinkling, and propensity on the consumer demographics. So some of the outputs which are very interesting, right? I want to predict what language to call the customer in. It can predict Tamilians living in Bangalore, right? That's the power of it. It can predict hair loss of a consumer, which is actually a sign of stress. It's very useful in our healthcare business, right? But it's a great opportunity in our mobile app, which lends in runtime at 2 o'clock in the morning to people. Right. When you're able to build these overlays, you are not just building fraud engines, but you're actually giving decisioning engines to have the next level scorecards getting built. Remember, just on bureau and bank statement, you can't really outperform the traditional companies because their cost of capital is far lower than yours. You have to build newer systems which can really become better. This is a running system. We've been using it very efficiently over the last few months. And the cost of this tool has come down dramatically because of, let's say, AI capabilities of building platform tech, which is easier to do today. And the second is to build customer connections to identify fraud. See, typically in digital lending, a huge amount of syndication fraud can take place. In traditional land, you may be able to create fraud at one branch level. Right? Very difficult to go to the next branch and do a similar fraud because the branch operates in that geography, customer has to be in that geography. But digital land, you can actually impersonate a customer across the country and start hitting syndicate fraud. So we built a syndicate fraud engine, and we actually said that anyone who needs help in fintech can use that engine. Right? It actually gives you interconnect, which means if there are, let's say, the 300 people in this room, 300 into 300 into 300 is the connection between each of us available. It does that overlays to identify what could be the fraud coming out. Today, it may be only, let's say, blocking out on a daily basis 600 people, but these 600 people, it's able to predict up to 98%, which means the ones it identifies are actually fraudulent. The bureau and the bank statement was perfect and the KYC, but it built triangulation, looking at other connection between the consumers to say these look like high chance of fraud, and that's what protects the company. See, end of the day, as long as you control fraud in such a manner that risk doesn't come into your risk cohort, which means you're predicting risk better rather than worrying about frauds impersonating your company. Right? And that is why there are very few companies over time generate consistent results. There are only a few generate those because majority of the time the fraud every few quarters comes and hits hard. If you build these tools and they run to a very large level, you are able to run your company primarily at a risk cohort level, which means as long as your credit risk is holding true, you are making money. Frauds will not cause a P&L loss. And that is what we have demonstrated. And I think actually we have published no syndicate frauds for the last 9 quarters, no actual, let's say, a fraudulent customer going through the risk cohort to actually getting money from us, which is a great example of how it can be done at scale. Across the country, we operate in 940 cities. We do more than, let's say, 16,000 crores of disbursement. We're able to manage that at a very large level and completely unsecured, no collateral, no physicality, average customers receiving money in a few seconds. That amount of systems can be built today with AI.
I think that nuance between fraud and risk is something that is an earned lesson, I'm sure. Yeah. It's something that, when at Finarkein, we are also doing a lot of data analytics, not just around account aggregator data anymore, but also other data sources. We are seeing that more and more. So I think kudos to you for highlighting that. So I think, Prashant, coming back to you, when it comes to lending against properties, I think it's a space that's going to evolve a lot in the next couple of years, and obviously it comes down to predicting the requirement for cash flow along with that, the value of the collateral, right? So if you're able to really nail these two things down accurately, how does this product evolve over the next couple of years? And obviously AI will play a role in not just the user experience and the journey, like I think we'll see towards the end. how the video highlights it. But if you can also talk about, let's say, collections or liquidation. I think some of these angles are something that are usually not talked about in panels.
Sure.
And especially on this kind of product. So I think that would be super interesting.
Absolutely. I'll also just take a step back and make understand what kind of our customers are, who they are, and why this loan makes sense to them. So, as we all, he was mentioning that 95% of the customers are micro merchants. Could be traders, could be retailers, could be service providers. What we have seen is almost 80% of them do not have any CIBIL score. They have not borrowed from the formal sectors yet. Mostly it is the private pan wale ki dukaan from where they have borrowed the money. So as a loan against property, where the intent is very high, if a person is coming with a property saying that, hey, I'm willing to take money at a 50% LTV, you know that the intent, if it's not a fraudulent case, the intent is very high. And this comes across as a low interest rate, low EMI because the tenures are higher. Tenures are for 8 years, 10 years. So low interest rate, lower EMIs, and higher ticket size product, which usually you do not get in personal loans or unsecured business loans. Our average ticket size is around 15 lakhs. So this basically helps these merchants to dream bigger, better, and take bold steps in their businesses. Most of these people I personally met, since we have branches as well, is feel extremely helpless, where they know that there's a business opportunity and they need 15-20 lakh rupees in a matter of few days, and with that they can upgrade their lifestyle of their house very, very differentiatably. Is something are the kind of customers whom we are working along with. A few of the things which has helped us as an alternate data at Optimo Capital is basically seeing their electricity bill. If it's a manufacturing unit, we pay a lot of attention to their electricity bill and their generator bills divided by the kilowatt hours of the machine which they run. Most of these people are running machines either out of their home or have a small rented area where they have put up a place. To give you an example, there's a couple who's running, a paint machine, where they basically pack the paints and supply it to bigger. They're kind of an OEM for the paint people. So if you just quickly check what the electricity bills are and divided by the kilowatt hours, you check. We ask them to record 2 minutes of the video of their machine, so we can understand what the RPM is of the machine and how much output is it generating on minute basis. On the basis of that, so one of the big problems in this segment which we are targeting is, even though there is a proliferation of PhonePes and Paytms, I would say almost 50% of business is still done in cash. Their cash income assessment becomes very, very tricky. Anybody who deals with MSMEs can understand and appreciate that. What alternate, instead of just telling that this is the business which we are doing in cash, the alternate sources which we have created are basically checking how much of the time their machines are working, how much productivity is it creating on the basis, what is the maximum amount this machine can even produce by checking the RPM of the machine. It cannot go beyond that, so hence whatever the customer is suggesting might or might not be true. So all these things, which machine learning, using the help of machine learning, we are able to understand better about the customer. And with the better understanding of the customer, we are able to underwrite better. In terms of valuation and, in terms of legal check, honestly speaking, the country is also evolving. And I believe that whatever digital land records exist in southern India states are going to come towards the northern part of India as well. Some of the states have already adopted. In southern India, I would say almost 96% coverage is there. So, which is very, very phenomenal. In northern states, there are certain states where up to 70-80% coverage has already happened. Now, there is a huge push. I've met a couple of chief ministers in northern state, and there's a huge push from their side as well to get the land record digitized, which basically helps in getting a lot of clarity, not just from the lending perspective, but perspective of everything. Who owns which land record. In fact, there's a big push from the government side as well to basically create a blockchain around it and let everyone know that they own this particular piece of land and how the transactions have also happened. Since 60% of our wealth is actually land and property, there's a huge push to digitize all of this. And unfortunately, at the moment, the final MODT, which is the lean marking, happens offline. But I'm hearing from a couple of states that there's a process to do the lean marking as well online. Once that happens, Optimo Capital will be really at the forefront to actually disburse money, hopefully like what Fibes and PhonePes of the world are doing. That is one final barrier which is stopping us at the moment. Almost everything else can be covered, checking the valuation of the property, checking the legality of the property. All that can be tackled. The lean marking is something which we all are waiting for that to happen digitally as well. But once that happens, we believe that things can move faster.
Yeah, I'll just give one example. As the mutual fund industry, lean marking became possible, right? We are able to introduce 5,000 rupee loans for taking a mutual fund lean marking product. Right? It's the cheapest cost of capital at an end consumer level available. For 921 rupees a month, you can get 1 lakh rupee in your bank account. It is actually the cheapest format of money. Right? There's nothing else possible this cheap as an economy level. Right? There is no principal payment to be done. It's very easy. And some of these systems got built over the last, let's say, post-COVID. Right? You can actually do let's say a 5,000 rupee loan, charge the customer 4 rupees to do the end monthly EMI for it. Unbelievable transaction happens on these.
Correct. And adding to this, since you were asking, how does the future look like for loan against property? I think eventually, as even the MODT becomes digitized, I see a very strong future towards having a revolving credit line. You basically lean mark your property, and you take whatever amount you need and pay back whatever amount you want to pay back. So it can become an OD account, an alternate OD account for customers at very, very attractive price. And I eventually see that after a few years, that to become a reality in this particular sector.
No, I think I was thinking along those lines where financialization or tokenization is a theme that's playing out in other global markets. Not quite there in India yet, but I think it's a workaround way to sort of eventually get there. Plus, today we have also seen certain lenders offering like a top-up loan almost as an OD kind of product as well on properties. So I think it's only a matter of time where we get there. And I think coming to the mutual fund industry, I think something similar is playing out in the security space as well. We are waiting on one depository to bring the lean marking API. And then I think that will cover the...
one more part in secured business. We also launched something as solar rooftop financing for residential neighborhoods, right? It's very interesting that you could build a product which mimics your electricity bill. It allows you to use the roof of your house to, in a way, have no cost of electricity ever to be paid over the next, let's say, 3 years. It's also subvented possible at the back end. It's secured as a category. And the concept is able to go live, let's say, for an end consumer within a couple of minutes. What's very interesting, let's say, in markets of Karnataka and markets of Gujarat, where, let's say, sun is extremely good, you're able to use this across the board with middle Indian homes. Let's say people who have roof area of 600 square feet are able to get 2,000 rupees a month of free electricity supply for lifetime built in without them contributing a single rupee. So we are seeing such products possible because of the technology innovation which is now available, and you can still do secured categorization here.
Yeah, no, that's fantastic. So Hemant, I think coming to you next, I think lending to micro merchants is something that is a priority for somebody like SIDBI, for example, right? And equally their cost of capital is pretty much unmatched in I think in the country, right? So talk to me about the Udyam infrastructure and the role that plays in assessing these micro SMEs, and do our lenders ready with their infrastructure to really support that? And I think somebody like PhonePe can be at the forefront to drive this adoption, right? So please, share some thoughts around that.
So I think one interesting fact that you see in everything that's got spoken here is the fact that I see last decade, especially in the last decade, it's not just digitization, but the adoption of digitization, the rate at which every ecosystem, right, Loan against mutual funds we had not thought of. We just spoke, and we've also launched. And the kind of adoption, people find it so easy to kind of lien mark and do it digitally. Land records, digitally available, and if a lien marking comes in, right from KYC. And if you look at world over, I've seen so many examples. It's just a struggle to do KYC. UPI-based mandate is a breeze right now, to set up mandates and set up repayments. So the core infrastructure is in place. There's good amount of adoption and understanding, and the rate at which the consumers are adopting it is kind of going to be enabling in the next decade. I very strongly feel that that's going to be enabling and just opening up doors of innovations across, right from solar to health to land records. Where what Nikhil was referring to, the small merchants, micro merchants, there is one big gap in the entire assessment today is that there's need for documentation. Do you have a business? Do you have some entity? Where do you operate from? And when you look at, and the video that you see will play, the video that we have brought in is just to show the impact that it can create. The small interventions can create in the lives of people. I mean, what keeps us running every day is the fact that we could impact people of millions and millions of very small merchants. They don't have an identity, which means that, if they have to share a shop establishment certificate or some, certificate of registration, they don't have it. MSME ministry working with SIDBI has enabled this, and there's a concept of Udyam, which means that they can generate their own establishment certificate by self-declaring, giving in the right authentication and creating it. This leads to one critical leg which establishes that there is an identity for themselves. This, coupled with the understanding of where the merchant is and what I was speaking of, the real small merchants, where are they placed, what's the business, how are they existing, what kind of customers are spending in, that in combination today is enabling them to be able to take a loan. The fact that they have been able to create their own identity, a self-declared identity, but their own identity, which is recognized by government, which is recognized by lending institution, is a big change that is happening. And what we are doing on ground is helping them create those. They can, in the path of the journey, they can actually register for Udyam and create their own business certificate, which acts as a proof of the business that they exist into. So, this is something which, we've been working with lenders, and we've recently directly integrated with, we've been the first entity to be able to register with MSME, with SIDBI through the MSME ministry on an API-based integration, which real-time onboards them, and gives them that identity. So that's what playing out, on ground for us. AI or big data, I would say the big data role, or the role of how machine learning also plays out in being able to kind of look at this. A lot of computing models are built, but the first step is to really understand what the data is and really build in very simple interventions based on, machine learning on around targeting, on around propensity. The kind of use cases and the explosion of use cases that we are going to see, while, AI is going to be taking off and taking off in a big way, I think there's a lot that we can do because of the quality and the quantity of data that we are sitting into. Just leveraging that data and being able to, reach the last mile. Our role has largely been on the physical side, and we've seen on ground, India is very different. When you go and, go into tier 3, tier 4 city, town, a small vendor, a small shop, a small this one, surviving by the day and, fighting for their existence, India is very different. And, that is what we see day in, day out.
Yeah, no, I think a quick follow-up to that would be, how do you balance for inclusion, since you would have a lot of data and, if let's say I'm new to the PhonePe platform, maybe I was running a business with, one of the other, payment companies, right? So once I'm entering, let's say, the PhonePe ecosystem, do you have the means to qualify me today on my outside of PhonePe business, or is that something that is still a gap? And is that something you want to tackle, or would you prefer like a business to build vintage and then subsequently have access to other financial products?
I think it's a combination of both. One, just an estimation, because we know and understand how the business evolves and what is the contribution. There is work that you guys are doing on, and a lot of entities are doing on account aggregator, which goes beyond the business and enables this. So we are working on both sides. One, lenders are looking at it and saying what is the estimate and how much can the business be basis the digital. The like what Prashant said, 50% of imagine 50% of transaction digitally was never even imagined in India. That itself is a big number. So that gives them a way to estimate. Account aggregator is building up very strongly and significantly. That over time, I think that will integrate. There itself, I'm saying the adoption at the rate at which customers will be comfortable using it and doing it will just unlock a lot of value.
Sure. So I think I'm going to conclude with a couple of quick fire questions, 20 seconds. Okay, we'll start with you. Let's start with the single best predictor for a 90-day default in your portfolio.
Single best predictor. I would say the face match. I would say the facial recognition system that we have put is actually the new cutting edge work that we have done. I think it predicts risk the best.
Got it. So coming to you next, Prashant, I think one micro policy you would want to protect customers from over indebtedness.
For loan against property, you cannot be over leveraged. One property, one loan. So effectively, we are just trying to convince them to get the lower LTV and use that money for their businesses. There's no over leverage at least in our side of business.
Correct. So it's more about making sure that the end purpose is for the right.
Correct. Just keep checking using account aggregator pulls whether the end use is actually met or not, whether you are seeing delta in their revenue increase.
Got it. And Hemant, I think coming to you next. One data set you would like to add tomorrow to improve thin file scoring.
Data set, I think leveraging account aggregator more deeply, I would say. It's gone through a lot of transformation, still evolving. That if it becomes very seamless at the lending end, it just adds to everything that we have.
That's, I think, something Finarkein can help.
That's very important NTC level, right? See, NTC is a very different orbit and very different game to play, right? Account aggregators may be the only tool available to give us repository data. But I think now the triangulation of cross-referencing data which is emerging, payments, let's say savings, coming from, employability and employer capability. When you combine all three of them, unearthing a newer customer segment is coming in. Like some of the LSPs that we power, we're able to do maybe twice the number of NTC, which were not possible maybe a year and a half back. With the triangulation of these three data is allowing the ability to the NTC base to grow up. And India is very large, right? Technically, only 4.5 crore Indians actually borrow, right? That's it. That's a huge opportunity for the rest of the population to come into the realm. And if you focus on the categories of NTC, you can really build out the India play coming into picture.
Yeah, no, I think that's a fantastic way to conclude the panel. We will just play a short video on the different applications of AI that each of these companies here are doing today.
Everything, almost everything, risk, KYC, income checks. But how do we check selfies? Photovigilance is still a blind spot, until now. Introducing Photo Fence. Vision intelligence for Fintech. Detect. Decode. Decide. Faster flags.
Without the audio, there won't be much relevance with my video.
It's okay. Let's not play it. It's better. It's better. Let's not play it.